tariff threat by U.S. President-elect Donald Trump helped to push the Canadian dollar briefly on Monday evening to a new four-year low. Now, it has bounced back a bit from that. It's holding above 71 cents U.S. But what is the risk to the Canadian dollar if we do get these massive tariffs imposed? Let's get more from Bipan Rai, head of ETF strategy at BMO Global Asset Management. Great to see you.
Great to see you as well.
Well, let's put up a one-year chart for the Canadian dollar. Presumably it's vulnerable here if these big tariffs go on.
Yeah, at first glance, I think the headline shocked a lot of people. Normally, I sort of use as a pulse check if my friends or my neighbors are talking to me about tariffs, then I know that it's gone to Main Street. And so you can make the case that, yeah, the initial shock headline from Monday night really spooked markets to a degree. But it's worth remembering also, if we're talking about the currency market, this is a market that discounts political themes, especially very, very quickly. Right, and if we talk about the way the currency market traded, or at least the Canadian dollar traded ahead of the election, we're off by 4% from where we were in early October. So that's one consideration. The other consideration is if we look at positioning proxies, there's a massive net short position already in place for the Canadian dollar via the futures market. So, the tariff theme to me feels like it's priced in appropriately at this point. Is the event a little bit different? Let's see, because I do think that the market is going to look back to the playbook of 2018 and use that as a corollary.
Well, remind us what happened. So Trump was elected in he took office in 2016.
Yes, yes. So he was elected in 2016, took office in 2017. It's a minor difference anyway.
Sure.
But the tariffs, the steel and aluminum tariffs, which were 25 and 10%, they levied at Canadian steel and aluminum. Those took, I think they started, he announced them in May 2018, and they went into effect in June 2018. Right. So, and then what happened then was that you had these tariffs in place for an untold amount of time. And then in 2019, they're actually rescinded because there was progress made on the USMCA. So again, if we look at past behavior and we sort of project that forward, this does feel like a negotiating tactic. And what does he want? What is the end game? Oh, there's probably something to do with the border, but potentially there could be an earlier start to the renegotiation of the USMCA process. And we know that that's going to sunset in 2026. Is that pulled forward? That's what we're looking at potentially as sort of the reason why, Canada's been at the forefront of the tariff threat.
And a lot of bets have already been placed against the Canadian dollar.
Yes, and that's why. When you see short positions built to this degree, and when I say short positions, again, I'm talking to the futures market, CFTC, net non-commercial short positions. Those are basically where we were in late summer. So that gets me a little bit nervous because where's that additional marginal net short seller of the Canadian dollar coming from? So, when you get to that sort of level, you map that on to what's going to happen in the spot market. I would feel like the spot market, meaning dollar CAD, is much more vulnerable to a short squeeze as opposed to any additional pricing in of the tariff threat.
That's interesting. We could see a rally in the dollar in the short term then.
Yeah, the Canadian dollar potentially. And I'm reluctant to sort of push that view because, again, we do have this massive blanket tariff potentially that we're staring down the face of. But I would also caution not to extrapolate that and think we're headed towards, say, a 50 or 60 cent Canadian dollar. I think I've seen that narrative espoused a little bit. And as somebody who's followed this market for the better part of 2 decades now, it doesn't work that way, right? We have to pay attention to the fundamentals that matter. That's primarily, if you want to place weight on something that's a little bit more important over the long term, which way is the Bank of Canada going relative to the Federal Reserve? I think that's a far more important barometer as a pulse check for the Canadian dollar.
Right now, though, we seem to be in a cycle of much more aggressive cutting by Canada. So presumably that'll push down our dollar more?
So again, remember, the exchange rate market tends to discount factors very quickly. Now, the zeitgeist a couple of months ago was the Bank of Canada needs to cut by 50 basis points out in both October and December. But if you're the Bank of Canada, if you're Governor Macklem, you're looking at the amount of easing that's already happened in the Canadian economy via the weaker exchange rate. Do you really need to be as forceful on the interest rate channel? I would argue not. So, you take that into consideration with the fiscal policies that were announced last week, with respect to the GST holiday, with respect to the rebate that's going out in the spring. It's untold or at least unknown what that's going to mean for the macro over the next couple of quarters. But there's less pressure to ease by 50 basis points in that environment, especially given the fact that if we do have this 2-month tax holiday, that's going to mechanically lower inflation on its own before it picks up again a couple of months afterwards.
And the government sending out checks, helicopter money, that'll have a brief stimulative effect.
Well, I don't want to call it my understanding of the helicopter effect is a little bit different, but certainly, it is going to have an effect potentially at the margin. But, in my view, I think that money is probably going to be saved And that's going to be important because there is a considerable risk for the Canadian economy over the next couple of years, and that, of course, is mortgage refinancing and the amount of households that need to refi those mortgages that are set at much lower interest rate levels.
Yeah, I was using Ben Bernanke's helicopter money phrase just for distributing money to the population generally, but I see it's not quite the same thing. Yeah.
No, it's as long as it's understood, I guess people understand. Yeah.
Bipan, thank you very much indeed.
Thank you.
Bipan Rai, head of ETF strategy at BMO Global Asset Management.